Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Brian Norton, COO of MyEtherWallet and Ethereum wallet interface, to discuss the surge in cryptocurrency, particularly with Ethereum. Brian, it's great to see you. Welcome to Trade Talks.
Thank you for having me. It's nice to be here.
And why has there been such a surge in some crypto? Can it be attributed to institutional adoptions? It's related to more mature crypto assets. And do you think it's sustainable?
Well, in short, yes. I think it is going to be sustainable over the long term. There has been a tremendous amount of growth over the last year and a half in the space, aside from the kind of recent growth spurt that we've seen since the beginning of, since at the end of last year. I think that that it's due to a confluence of influences, including the expansion of the development in the space, the emergence of DeFi on blockchains like Ethereum, and the introduction of yield farming into the crypto traders lexicon, and a new crop of users has followed into that. And so I think that what we're seeing starting in December and continuing now was driven by institutions starting to take notice of the real value being added in the space.
Tell us about the rise of decentralized finance, or what we call DeFi and Ethereum. What are the use cases for it, and what makes it different than Bitcoin, as an example?
Okay, so with DeFi, DeFi being decentralized finance, what we see is a permissionless way of interacting with financial applications, meaning that you're dealing with code, you're dealing with applications, you're not dealing with a human making decisions about what happens with your trading portfolio. And there's been a number of great projects that have been launched over the last year and a half. Aave, Compound, these lending protocols, automated money markets. And what these have done is allowed users to trade and gain interest and lend permissionlessly. And these projects have been pretty well battle tested over the last year. And so there's been a lot of interest there. One of the primary differences between Ethereum and Bitcoin is that Ethereum was built to be built upon. It's built to fuel other applications. Bitcoin is primary use case is to send Bitcoin. And it's designed to send Bitcoin back and forth and preserve the value of Bitcoin by being deflationary. By contrast, Ethereum gains its value and gains demand by these applications being built on Ethereum and fueling those applications. So every application requires Ethereum in order to execute a transaction on the blockchain. And because of that, the more that people are transacting, the more things that are built for people to transact with, the more demand there is for Ethereum, and that's what drives its value.
And we've heard a lot about the crowd trade, right? It's the end of January going into February. Has that contributed to some of the moves that we're seeing in crypto?
I think it's impossible to discount it. I think it's absolutely has had an influence. How much? It's a little difficult to say. Like I said, over the last year, we've seen growth in the crypto space and in the DeFi space in particular. I think the last time you and I spoke, we were celebrating 11 billion being total value locked in DeFi. February of last year, there was 1 billion locked in total value. Today, as of this morning, there's $33 billion locked in DeFi. So this growth has happened over the course of time, and we've seen other trends that have contributed to it. But I would be remiss to say that more than any other time since I got into this space, I've been waking up to texts from friends and family who never had much interest in what I did before, asking me about crypto. And I think that that's largely been driven by the events of the last couple of weeks.
Well, Brian, we understand the use cases for Ethereum, they're being practically applied. Are you concerned about retail investors plowing to assets where the use cases are not understood? And I realize that everyone has the right to make money. And for those who have, with this recent wave of trading, have seen significant returns, everybody has the right to participate in the market. But there also comes a risk, as we've also seen. So I guess sometimes I'm concerned if you don't understand whether it's the use case for a specific cryptocurrency or something within the digital asset space. Um, so, I guess you could say that for any asset class.
I think, it is definitely a concern, and it's something that I always try to impart to people who are asking me whether or not they should be entering this space. I obviously believe in it, but there are inherent risks to blockchain investing that don't necessarily exist or don't manifest in the same way in the traditional financial markets. There are protocol risks. There are, if you don't understand a particular use case, if you don't understand how smart contracts work, if you don't understand why Bitcoin has value as opposed to why Ethereum has value, these can cloud your judgments. So like I said, there are battle-tested applications in the DeFi space: Aave, Compound, MakerDAO. These have been around for a long time. They have controls in place. You can audit their code. But the average person doesn't know how to audit code for themselves. Right. So there's an extra level of diligence that has to be done for them to be able to properly grasp whether or not this thing has value and is safe. Because for every battle-tested protocol there is out there, there's something else that's been built last week that is being tested in production. And great projects have been built that way, but that doesn't mean it's safe to start off with. It doesn't mean that the average person without necessarily a technical background will understand those risks. So I would urge that investors coming into the space, please do your research, understand why tokens have value, because not every token derives its value from the same place. And then also remember that market fundamentals aren't left at the door just because it's the wild, wild west of crypto.
Right. Well, it's just like anything else, investor education. If you want to bring it back to a traditional asset class, I mean, look at biotech companies. They require research, right? And
yeah,
some will work out, some won't. But Brian, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.